Back on Economic Buzz, this program can also be seen through StarHub Asia Channel 121 Singapore and live streaming on okzon.tv, also sindonews.com. With me, Erwin Suryabrata, and we have Mr. Vicky Amarnani. He's the market strategist from Monex Investindo Futures. Also Mr. Joe Dinapoli, a professional trader, author, and the godfather of Fibonacci for sure. Well, Mr. Vicky, without having any intention to argue your statement, why would people invest in deposit? It leads me to another question. I've been wondering, even during the commercial break, we keep discussing about this. Do you see any radical change in terms of people investment preference?
Well, I mean, from my side, I see a lot of people investing into bonds as an alternative for deposits, because, I mean, but they would invest into safe bonds where there's government ownership or there's strong, basically strong multinationals, because they know that these companies are safe and their money won't go anywhere.
Right.
So then by buying this bond, they can get returns of maybe 2%, 2.5% with a 5-year, 7-year tenor, compared to a deposit, like let's say even in Singapore, where they get 0.22% per year. So that's one. Equities, people have been, gold has always been a favorite. I mean, it's on a correction mode at the moment and on consolidation. But these are, I mean, this is why people are getting more attracted towards the online trading market. Job conditions are getting tougher. We've seen that. So that's also creating the online market for as an alternative for income as well.
On your opinion, Mr. Dinapoli, when we talk about the preferences of the investors in terms of investing their capital, are they not tend to be much safer player? They don't speculate too much.
Well, they've been burned already. I mean, look at what's happened in the U.S. You had the .com bust around 2000. You had 2007. The markets crashed. I mean, utterly crashed. You know, 2% or actually 0% looks good if you can maintain your capital. So it's not an irrational situation. What's happening now, though, is different. I can see that the professional trader is moving solidly into equities, and interest rates have started to rise just a little bit. They're coming up. And I think we're going to get inflation down the line, which is going to cause interest rates to rise.
With all the quantitative easing that's going on.
Actually, I don't think it's the quantitative easing that's going to raise the interest rates ultimately. Of course, there's more stuff in the economy.
Well, Mr. Joe Dinapoli and also Mr. Vicky Amarnani, having understood this current situation, then what kind of, or are there any interesting opportunities anyway that we can grab from the market? Maybe Mr. Vicky Amarnani first.
Well, I mean, I like the yen currency at the moment. I mean, a lot of people think that they have missed the train already. The dollar-yen currency has rallied from September last year from a level of 77 all the way up to 94.5, and now it's trading at the level of 92.5. But, I mean, the Prime Minister Shinzo Abe, he's actually mentioned to fight the deflation in the economy. I mean, they've been in a recession for decades now. To fight the economy, they're comfortable with the dollar-yen even being at 95 to 100, and we're still trading at the levels of 92.50. And in fact, I see the dollar yen going well above 100. I mean, a good method would be to buy on corrections for investors, but I think that is a good opportunity, and the yen is still has a lot more weakness to go. I mean, because Japan is an export-oriented country, such as Toyota, Toyota, Hitachi, and those kind of companies, every 1 yen weakening is $125 million more profit for Toyota. So that's one interesting opportunity in my mind. Second thing I would say is the euro dollar. We've seen the euro dollar fall down from 1.3710 all the way down to 1.3050. I mean, when there's a risk-on mode, the euro currency tends to appreciate against the dollar. But with what's going on in the euro economy and the technical downtrend, I think there is more downfall for the euro below 1.3. The sterling economy. I mean, the only reason why the sterling dollar appreciated last year was because people were worried about the Eurozone, the Greece coming out, Spanish problem, the Italian problems. So people were just, they weren't aware about the currency. They were just diverting to the UK. But if you look at the UK, they're under they just got downgraded by Moody's from AAA to AA plus. The GDP is under recession, retail is down. I mean, everything is negative about sterling at the moment. So we're seeing sterling trade now about 1.5050. It's already dropped about 1,200 points, but I think this is clearly going around to the 1.45 level. We will see some pullbacks, but I mean, I tend to follow some fundamentals as well for a longer term trade. So I think this one is going down further.
On the currencies issues, Mr. Joe Dinapoli, related to this kind of area of field, what will be your outlook when we talk about Forex?
Well, I couldn't agree more with the Japanese yen. We got a sell signal, weakening signal. I trade the futures, and so the numbers are upside down. But we got a sell signal back in October. At that level, we're at 127.60. Now that's equivalent to...
In spot, that converts to 77.15, so that was just about 50-60 points off the low.
All right. Sorry to interrupt you, but we must continue after this one, gentlemen.
Fine.
Okay. And make sure you are still with us on Economic Buzz. After this, we are going to talk more about time to trade with Monex, outlook and opportunities. Stay tuned.